Hello and welcome to FTR. First of all, I just want to say thank you for joining us, and I'm looking forward to helping you and assisting you on your journey to becoming a profitable trader. I trade mathematically, okay? I try to trade without emotions, but like everybody else, I'm only human, so I make plenty of my own mistakes. But I try to eradicate those by using mathematics in my trading, and quite frankly, that's what it is. We're trading a financial market at the end of the day. The market doesn't care about our feelings, neither does anybody else. It's down to us to try and figure out what's happening, how often it's happening, and how we can capitalize on it. We use two primary functions in the market, okay, two primary patterns. These are known in the SMC world as boss and chock. I'm going to draw out a boss pattern for you and just really simplify it. We have a starting point, a push up, a pullback, and what's classed as a break of structure. Okay, so I'm going to go through that again. Starting point, let's call that now the low because we can identify it as a low. We get a push higher, which is a high. We get a pullback, which is a higher low. Then we get a break of structure, confirmed by this break here. We end up with a higher high. We end up now with a higher low. This low is discarded a lot of the time. This break of structure is classed as boss. Boss, break of structure. It's just an acronym. Really, really simple for a break. Okay, it's a structure shift. In the adverse direction, we have, again, a starting point, a push lower. Okay, we push up. Again, this isn't identified as anything at this stage. It's just a pullback. It's a pullback on that previous leg. We then get a push down. That is when everything is confirmed. Starting point, low, pullback, break of structure, lower low, lower high, boss. The next step for both of these is chock, okay? We know that boss, again, this is our mathematical probabilities, boss happens 65-ish% of the time. And I say ish because the more that you do it, the less variance that you're going to get. But generally speaking, let's call it 65%. This doesn't matter really what time frame you're on, what currency pair you're on, what instrument you're trading. Doesn't matter if it's stocks or crypto or if it's indices. It's always around about 2/3 of the time that you're going to get boss. Therefore, a simple and profitable strategy that you can do is very simply wait for a pullback, put your stop loss behind chock, target boss on a 1-to-1. Boring, I know, but extremely, extremely consistent. That is what I would recommend to every beginner trader to start off doing. You're chasing boss. It's as simple as that. The method of entry is this. You're waiting for a pullback to the halfway point of that previous leg, and then what you're going to do is target boss again. Sorry, the target will be down here. Get to a 1-to-1. That will happen 65% of the time. That means that you've got a profitable trading plan. Now what we do, which makes us stand out from the crowd, is we identify particular areas within this pullback leg, which are classed as typically order blocks or points of interest. Now, each one of these will have a different probability rate of price getting to, okay? It sometimes means that you will miss a trade. Sometimes it means that price will go through your area. And as with everything, you're playing with probabilities. The main purpose behind that is instead of us aiming for a 1-to-1, like what I just demonstrated, okay, and a 1-to-1 is absolutely fine. You know, it sounds a bit retail-y and everyone wants to sort of get away from that. But in reality, that is your baseline, 1-to-1. What we're doing is we're shrinking our stop loss to try to identify the exact turning point in the market before we end up getting the next break of structure. 7.2 in that example. Over here, 12.3. Now don't worry, I know that I've just drawn this out, but I'm going to show you on the charts just exactly what it looks like. I'd used the word just a second ago, a little bit out of turn, but I'm going to show you the very next characteristic that we follow. So I'm going to draw out boss again, where we've got the low, high, higher low, higher high. What happens when the market turns around and decides that it's going to change its whole direction? Well, we need to get a confirmation that this has happened, but generally speaking, what we have had is the break of structure in one direction, which is great, but then we have a break of this higher low. This one down here is classed as a change of character. The difference between me and a lot of SMC gurus that you'll see on the internet is I don't class this change of character until I actually get a body break. The reason for that is I want to see continued momentum to the downside in this scenario. Quite often you will get wicks, okay? So a wick will come down, stop you out of your position, followed by another wick, stop you out of your position. But what that does is that causes a very simple zigzag, which means that there's a huge line of liquidity. That information you will learn later in the course. But generally speaking, what we're looking for is a pullback and a continue and get a boss. So boss and chock will change, and it doesn't matter which direction you're going in. Sometimes boss is going to be at the top, sometimes boss is going to be at the bottom. But we are always trying to target boss. That means that we're following the trend direction of the market, because there is an old phrase, the trend is your friend until it ends. Good reason that. There's 65% chance that it's going to reach boss before it reaches chock. Therefore, we're trying to go towards the highest probability of winning. Now, there is another pattern which we can follow, which has 85 to 95% win rate, depending on, again, what sort of time frame, what pair that you're using, that sort of thing. And it is after you've had chock occur. So after this leg has come down, you get the pullback, and then you get boss. This second part right here has such a huge win rate. It is almost criminal not to place your trade somewhere here. And what we found as well is that if you can couple this price movement within a higher time frame point of interest, so we identify those primarily through order blocks, not always order blocks, and we will go into what an order block is. But if we've got a higher time frame point of interest and this price action occurs, and the higher time frame is going in this instance, in this sort of direction, we want to be setting our targets ideally at the next highest time frame break of structure, or we want to be trying to target the next higher time frame order block. Okay, so that means that our trades can go from initially what we're looking at as, you know, a standard 1-to-1 to actually pinpointing a particular area within here. Sorry, I know that it's getting messy, but I will show you on the charts in a second. We're trying to identify a particular area on a lower time frame, increase the risk reward ratio from 1-to-1 to at least 1-to-4. That is our minimum, and feed it down to the next higher time frame, either boss or point of interest, and the results can be absolutely staggering. Now, the key thing for us is trading positive expectancy. Positive expectancy means that if you are going to place a trade, regardless of whether it wins or loses, you know that over time it is going to make money. On the charts over here, it's just an example from about a month ago using AUD USD. We've identified a higher time frame POI just over here, which is the H4. So switching over to the H4, we'll try and make some sense of this. The market has pressed up, pulled back, pressed up, pulled back. We're starting to head into a downward movement. We get chock, chock, work our way into this higher time frame POI. Therefore, we're now going to drop down to the M15 and follow what happens with price on a lower time frame. Our targets primarily, because we're going from one extreme, and what I mean by extreme is one end, the furthest place where we could get involved in a trade before we're completely wrong and we actually get chocked out of the entire position. So we're actually targeting from the extreme to the extreme, which would be the next breaker structure. Dropping down to the M15, which is our entry time frame, we have an attempt at the area, and then we get a second attempt, and then a third attempt at the area. We end up getting chock on the M15 just here. Okay, so we get our boss upwards, and then we get chock. Chock is convincing because it's only had a blue candle, strong blue candle to break through. We're therefore looking for particular areas where price can either be a order block or a standard point of interest where the wicks are overlapping each other. So we've broken down with strong momentum. Ignore the time. I know it's showing that it's 2:30 in the morning, but these do happen throughout the day. I'd identified this area as our point of interest. It's where the wicks are crossing. We go our entry into the area using a pending order, and our targets for this particular trade can be really simplified, where you can either take partials, which means that you're taking a little bit of a percentage off the table. So you could bag, say, 25% at this stage right here, which is the first initial swing. That would bag you around about 1.5% at this stage. Next target is obviously going to be more of the structural swing, maybe another 25% to come off. So you're going to bag yourself another 5-ish% right there. But if you're holding the whole position, it'd be 20% by the time you get to here. Now following that, if you work your way down to the break of structure, essentially, it's going to be around about 35, 38R, which is incredible. That means that you could take 38 of these trades in a row and get them wrong, and you'd still break even. So I'm just going to follow price out and show you what had happened. There's a couple of places where price had come back into, and we would retest those areas and fail. You can't win every single trade. You might be thinking with this particular trade, why is it that we're only targeting here as a target? And same with that one, why we're only targeting actually there instead of all the way down here. Those rules will make sense to you the further that you go in this trading strategy. As you can see, this one would have worked out at 6.77%. There are a few losers in here, and that's absolutely fine. The strategy itself, using the raw basics of H4 to H4 using the M15 as an entry, which is what I'm showing you, has typically around about a 25% win rate, which doesn't sound great. But when you're getting a risk-reward ratio like this, really, who cares? What we've done is we have sacrificed some of the win rate, which we have of 65%, and drastically increased the risk-reward ratio. And the reason for that is that we have room for maneuverability. You're going to find as you go through that the more confidences that you add, you actually slowly diminish the win rate, but drastically increase the risk-reward ratio. And you're going to have your own personal limit as to how many confidences that you add. I personally have quite a low win rate. Sometimes my win rate will drop below 20%, and that is because I'm grabbing the massive trades. At other times of the year, if I'm seeing too many losses in my account, I will drop a few confluences and start taking easier, simpler trades, and therefore diminishing my risk-reward ratio just to get a few wins in the bag to help me psychologically. That is something that is going to be personal to every single trader who joins the group. So don't feel that you need to keep up with the guys who are bagging these 20R trades. You can absolutely make profit on 4R. You can even do it on 1R. It's as simple as that. We're following the trend direction. I'm going to keep on clicking through and just watching as price goes. Bear in mind, these two trades right here, you would need balls of steel to hold on to. You would even need it just to hold on to this initial trade, having gone about 20R into profit initially. But this is just showing you what would have happened, and that looks like a very blatant red news move, which quite frankly, I would have closed out of these positions with around about 10 or 15R in my back pocket. And of course, we go down, we get the breaker structure that we want. So the FTR trading strategy is there to make us money more so than any of the other strategies on the internet, because we're using mathematics behind our trading. It doesn't mean that we've got no personality. The guys in the group are here to help you. Just put your questions into the relevant places within Discord, and don't forget to post your charts as you're going through. Don't be ashamed of getting it wrong. I was the world's slowest trader to become profitable. It took me around about 4 years. And even then, I still go through massive losing streaks like you would not believe. The videos that I show on YouTube will show basically what would have happened on a good week. That doesn't happen all the time. It's quite easy to get lost in direction or trying to get too complex in the strategy. But if we stick to the basics, just the raw basics like this, you are going to be a very profitable trader very quickly. And there are several traders in the group who are fully funded, who use prop firm accounts. There are several multi-millionaires who have been in the group as well. And they just tend to use the more simpler versions of the strategy. And that version of the strategy is what I'm showing you now.